It seems to me that there is a growing amount of pressure on tech companies, companies in general. I mean, you think about what Sony went through to be more vigilant. If you're Twitter, for example, a lot of businesses and individuals might think twice about using Twitter, especially if they could find a more secure solution. So with the thought of keeping this as much as possible in the private markets, what is it that companies, users, everyone needs to do to be more secure?
Well, I think security is a huge priority, regardless of what kind of company you are. Look at Target, look at Home Depot, look at Sony. I mean, you've got issues in security, whether you're in tech or not. It's just the reality of the world that we're in. For Twitter specifically, it's important for them. It seems like just about every major brand has had at least some sort of embarrassing moment on Twitter, on Facebook, on some sort of social media at some point over the last few years. So tightening this up, continuing to build the walls that they have around it will be important for them. But as far as an alternative, the toughest thing about this isn't security, it's building an audience. And so any alternative that claims to have security is only going to have that security as long as they don't have an audience. Once you get that kind of audience, you become a target just like anybody else.
The CEO of Twitter is going to be at your conference tomorrow. How do you think he should respond to these attacks?
Well, look, they've talked about this. They've talked about a lot of the other issues. I think their real focus right now is on growing users. It's their investors, their advertisers are focused on how big that platform can get.
Do you think that growing users in an environment where people are worried about their account being hacked becomes more challenging?
Look, I mean, think about what the real downside of an account being hacked is in Twitter's world versus, a financial account being hacked, which happens regularly. I think it's clearly a priority for them, and they're going to continue to focus on that. But when you think about their user base, it certainly doesn't seem to have hurt their user growth, at least not in any sense that you can really tell.
Let's turn to valuations right now, some of which have been pretty out of sight in the tech market, especially, it seems anyway, in the private market. I actually happen to think there's a whole lot of good stuff going on right now. And the tech that we are seeing, a lot of it really is game-changing. But there are a lot of people, Heath, out there that are worried about investment getting reckless. When you start talking about a $40 billion valuation on a company like Uber, some are saying, how are these PE guys ever going to get and make their money back? Is this environment out there on the West Coast getting too frothy?
We go through these cycles and have gone through these cycles for the last 15 years in internet, as long as I've been covering the space. And valuations tend to flow back and forth between the public-private markets. Public gets a little hot, private gets a little hot. Ultimately, though, those two things tend to correct for themselves. And I think to the extent that we're seeing any sort of frothy valuations in the private markets right now, ultimately what we're seeing in the public markets, where you've actually seen a few companies that have gone public have to go public at valuations below their last private round, is probably going to be enough to send that message back into the private valuation.
So your expectation then is the private markets actually might start cooling in the near future?
Well, I think we've seen that ebb and flow back and forth before, and I think the only guarantee in this is that we will go back and forth between warmer, colder markets from a valuation perspective on both sides, public and private.
Heath, you mentioned that you've been covering this industry for a while now. When you think back to those heady days of 1999, is there anything about now that reminds you of then?
Not much. I mean, I think anybody who was here in San Francisco in 1999 and sees the difference between the kind of companies that were going public then, particularly from a financial perspective. I mean, remember, these were companies that in some cases were pre-revenue, and in almost every case weren't profitable.
We still have those,
the companies that are going public now, a lot of the Yeah, and we do, but very few of them are public, and the ones that are private, you have a pretty clear path to where that profitability is going to be. It's pretty rare that you're seeing those kind of valuations without some very clear numbers behind it.
I was talking with someone earlier today. I lived in San Francisco for about 4 years, and I can remember when we moved there in 2001. Rents plummeted, and believe it or not, we did a story on the local news on this. You could not get a U-Haul because people were leaving the city and the area in droves. So certainly we don't want to see anything like that again.